Hello, everyone, and welcome to the Dakota Fundraising News Podcast. Today is Wednesday, January 15th. We are coming off a high here in Philadelphia with the Eagles winning their first playoff game. More fierce competition coming with the Vikings this week. If our colleague Sean Dolan is listening in, he lives in Minnesota, and he is the enemy from now until further notice.
Sixers staying in South Philly, too. Just want to call that one out. Big win for Philadelphia, in my opinion, at least. Yeah,
it's good stuff. We actually have one at least sports topic to talk about on the fundraising news pod today. So, I think we just jump right in. We'll have more to talk about on Friday too. But everyone knows Arctos Partners. They sort of led the way with sports investing, being one of the first firms that were able to invest in minority stakes in teams. But a lot of others are sort of following suit. So Lazard has actually just announced that they have grabbed a trio of recruits from Guggenheim Securities, including a new head of global sports advisory. Very exciting for Lazard. Managing Director Stephen Finkel is going to be joining their team. He has experience in sports and media advisory at Guggenheim and Rothschild. They also are going to be focused on media, entertainment, and sports. So really exciting. I think that whole industry, that whole sub-asset class of sports and entertainment finance is really, really interesting.
Yeah, it really is. We've called it out on the podcast in the past, I'm pretty sure. But, different allocators to Arctos includes Kentucky Public Pensions Authority, Maryland State Retirement, Oregon Public Employees, just to name a few. Blanking on some others, but I'm sure they're in marketplace if you have access.
Yeah, so it's really sophisticated investors who are getting involved in the sports stuff. It's not just a niche area for Saudi sovereign wealth funds and for family offices, right? It's really we're seeing a lot of domestic pension funds involved, which is very exciting to see. So just wanted to call that out. We'll have more updates. We've had positive feedbacks from some folks who listen to the podcast on the little sports talk we do. So if we can combine sports and investing, why not? But in the meantime, let's just jump to the job and role changes. So starting out in Austin, Texas, Kestra Financial, a large broker-dealer you all are probably familiar with, they've announced a promotion. So John Amore is going to be promoted to president. This will be effective April 1st. He will be succeeding Stephen Langlos, who will be retiring at the end of 2025. So Stephen will stay on for, I guess that's 8 months to help with that transition, and then he'll see his way out, and John will be taking over those responsibilities. On the investment firm side, as we continue to add investment firm data to Dakota Marketplace and launch Dakota Research, which we're very excited about, that everyone will be learning a lot more about here soon. We want to call that out. So Ares Management, they have announced that Kevin Alexander has been promoted to be the co-head of their alternative credit strategies. He will join fellow co-heads Keith Ashton and Joel Holsinger. That is effective immediately. Alex has been with Ares since 2009, which is, quite the commitment that he's made to their alternative credit and their Pathfinder investment committees. So good to see that being rewarded now with this new leadership role.
2009 almost sounds like an imaginary year at this point.
Yeah,
it's kind of crazy.
It's made up.
I can close off this segment though. Emigrant Partners, they have announced through LinkedIn that they're recruiting a former Raymond James director. That's going to be Carl Ingram, effective January 6th, so a little over a week ago. He is serving as Emigrant's Director of Investments. In this role, he'll be in charge of identifying potential RIA investment opportunities for immigrants. So really interesting stuff there. Any potential acquisitions that they make in the future, we'll try our best to cover it.
Speaking of acquisitions, why don't you keep rolling with Wealth Enhancement Group?
Yeah, absolutely. Wealth Enhancement Group, they announced the acquisition of Dannison and Associates. This is an RIA based out of Columbus, Ohio, adding about $82 million to WEG's client assets. In total, this deal closed on December 31st, so just at the end of last year. Dannison Associates, 4-member team led by Dean and Tracy Dannison. Yeah. I can go one more on this one. Did you have a quick comment there?
Yeah, I was going to say, not to be confused with Dennison, the endowment, or the Dennison Associates that people may be familiar with.
Yeah, good point. I did have to do a little quick look back there for a second. We'll keep it moving though here. GCG Advisory Partners. I didn't put this script together, Pat, so you added some firms that we don't normally cover here, which is great.
Yeah, it's fun. We wanted to get some variety.
Yeah.
Keep you on your toes.
GCG Advisory Partners, wealth management firm based in Charlotte, North Carolina. They have announced the acquisition of First Fidelity Financial Group. This is a $170 million RA based out of Atlanta. Weren't you just in Atlanta recently?
No.
Okay, thinking of somebody else. But yeah, this acquisition is going to allow GCG to expand their footprint in the Atlanta market, increasing their total AUM to approximately $2.9 billion. Both firms are connected to Osaic.
Yeah, and again, First Fidelity Financial Group. While I'm just doing these clarifications, not to be confused, they're not affiliated with Fidelity Asset Management or Fidelity Advisors. CapTrust Financial Advisors, though, back to Texas. I talked about an Austin job change with Kestra. Now we're in Houston. So CapTrust has announced the expansion of their Houston operations with the acquisition of Wealth Covenant Group. That is going to be a $300 million addition to the CapTrust platform. They now have 12 locations across Texas and 188 employees. Wow, that's a lot. We'll just keep rolling. I think we're going at a good flow, good speed right now. Nice quick news for
your favorite
listeners.
part, searches.
My favorite part, searches. Haven't said it in a while. Iowa Public Employees Retirement System, they have announced a search for hedge funds and liquid alts. It's on the absolute return side. Deadline is Feb 21, so you do have plenty of time if you're listening to this on Jan 15th. We're recording on the 14th. The product must be registered as an investment advisor under the 40 Act. So the Investment Advisors Act of 1940, provide the full Form ADV and proof of bank exemption. The product must have a minimum product AUM of $500 million as of December 31st and a continuous and proven track record of at least 5 years.
Yeah, I can take the next two here, Pat. And then we have a couple consultant updates after these next two searches. We don't get a ton of consultant updates, but there's a number of them recently. So we'll fill you in on that here in a second. But back to searches, recent active RFP from Bristol County Retirement System. They're looking to allocate $21 million to U.S. equities. That's going to be in SMID cap value or small cap value. Deadline for this one is the 11th of February, so a little less than a month there. And they're going to be using Siegel Markle for this search. And then lastly, also in U.S. equities, but this time large cap value, the City of Holyoke Retirement Board. They're looking to allocate $20 million to that asset class. Deadline is February 14th, Valentine's Day. So before you go out on that date, get that RFP in.
Yeah. And that's a long weekend this year. If anyone was not aware of that, any gentlemen listening in, a good chance to get away for Valentine's weekend.
Leap year was last year, right?
Yep.
Gotcha. Back to Holyoke, though, they're using Mariner as their consultant. Again, as I mentioned, U.S. large cap value, looking for commingled funds, limited partnerships, or mutual funds only.
Cool. Yeah, on the consultant side, these are always fun. We see a lot of them at the beginning of the year and then at the end of each of the quarters. So just calling this out. But the Wyoming State Loan and Investment Board has retained RVK. They were considering Makita. If you all recall, we did mention that search at some point last year. So that was just announced on Jan 2. TRS of Louisiana, Konch, you'll talk about an investment from them in a few minutes, but they have started preparing for an upcoming RFP for a private markets consultant. The contract with Hamilton Lane is set to expire December 31st. So that's end of the year. So we'll see how that goes, if they retain Hamilton Lane or if they do bring someone new on. And then California State Teachers Retirement System, they have approved launching an RFP in the winter of 2025 for a general investment consultant. Finalists will present at the March 2025 meeting. So if you happen to be a consultant listening in, there is an RFP out right now for a general investment consultant for California State Teachers Retirement System. Currently, they are using Makita.
Yeah, massive plan. If you can somehow get them off of Makita, I'm sure that'd be a huge win. You did just mention Louisiana and TRS, though, with their upcoming private markets consultant search. They also recently disclosed one private market allocation that's going to be in private credit to the Arcmont Direct Lending Fund 5, $100 million allocated there. Louisiana TRS, they manage around $26 billion using Aon, Mercer, and as Pat mentioned, Hamilton Lane on the private side. And then Other investments we just want to call out here: Cincinnati Retirement System. I don't think we talk about them a ton. They manage $2.4 billion in assets, leveraging Marquette as their consultant. 3 recent investments that I'll list off here: $25 million to the Sigler Guff Fund 6, $15 million to the JP Morgan Coin Fund 2, and then $10 million to Timber Bay Fund 3, all those in private equity. Sounds like JP Morgan Coin Fund, maybe potentially crypto related. Might have to look into that one, do your own research. And then lastly here, LA Water and Power Employees Retirement Plan, $20 billion retirement plan leveraging RVK and Stepstone. They allocated $90 million to Clear Lake. That's in their Fund 8. $25 million to Clear Lake's Lime Rock Co-Investment Fund. And then to Bain Capital Real Estate Fund 3, $75 million going to that value add real estate fund. This is coming from a December meeting. Also at that meeting, they recommended a slight change in their asset allocation that I'll just quickly call out, looking to increase their allocation to fixed income by 2.5%. As a result, decreasing the private credit allocation by 2.5%. So it sounds like they're just trying to stay within the same bucket, but maybe a different focus there. That's it for the new investments. Pat, I know you have a number of fundraising updates that we want to share with the team. Kind of already teased it, but this, we'll have this and a ton more in Dakota Research, maybe a new show that I think you're going to be a part of that will expand. Here we're talking, 3 or so fundraising updates. There's tons of them that we're publishing on our website every day, dakota.com/news. But I'll let you go on this one.
Yeah. So first I'll start with Stepstone. Stepstone Group, they have secured $1.4 billion in capital commitments. That includes separate accounts at the final close of their first infrastructure co-invest fund. So that's very exciting to see coming from them. Canal Road as well. I want to talk about that. This one's a little different. So Canal Road Group, they have decided they're going to launch a direct lending strategy. And then that is actually being seeded and backed by a strategic partnership with BMO Financial, the Canadian lender. So that's really interesting to see. It's $1 billion in commitments to support Canal Road's direct lending strategy. And again, that is the inaugural strategy from Canal Road, targeting first lien and unitranche below investment grade corporate loans for North American companies. So a nice direct lending fund there. Always fun to see. Talked a little bit there about Canada. Now let's go totally across the globe to a different hemisphere and talk a little bit about Australia. So the investment management arm of Australia's Stamford Capital is looking to raise $100 million for their 4th opportunistic fund. They reported that on January 10th, just a few days ago. Very exciting. They are anticipating a first close of $30 million by the end of January. The minimum investment is $100,000. So a lot of action happening there. I feel like we talked a lot about Australia at the end of last year. Maybe there's a burgeoning institutional investment scene there that I'm not familiar with. I'm looking forward to learning more about.
That's awesome, Pat. Yeah, before we started recording, you were debating on whether or not you're going to make it to our Miami event this coming Sunday, I think, right? I don't know if you'll be there, and it's probably too late for any listeners to sign up at this point, but we will be. At least I won't be, but maybe you'll be in LA on February 4th at the Beverly Hills Hotel, and then at Park City at the Spur on March 20th. That's the slate so far. Are you going to any of those?
I will not be at either of those, but you will see Matt Marino at both. If you've listened to this podcast for a while, Matt Marino is our favorite guest host when one of us is out of office. So very fun. He will be at both. He's a hell of a skier, actually. So if you are too, you can meet him and the rest of our team on the slopes in Park City on March 20th, and then that evening at the Spur. LA, we did reschedule, obviously, with all the fires and all the tragedy that's happening there. Scheduled for Feb 4. We'll obviously keep everyone updated if it has to move again. We're being mindful of that. And then, as Konch mentioned, we have a Miami event on January 26th. That is a Sunday. You read it right in the calendar. We've done that for the past 4 years now to kick off Miami Hedge Fund Week. It's very fun. Folks come in a day early. It's a real blast. I will probably be there, leaning towards like 95%. Sure.
Nice.
That's going to wrap up the fundraising news pod for today. A lot to come as we get deeper into this year. Thanks, everyone, for the continued support, and we'll see you on Friday.
Thanks, guys.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediate database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.